I want to take a closer look now at the state of the economy with Greg Daco, who is Chief U.S. Economist at Oxford Economics. Good to see you, Greg. Lots to get to here this morning. I want to start with these jobless claims, though. An encouraging sign that we're seeing continuous claims continue to come down, but we still have millions of people in this country out of work. So do you think it's fair to say that the job market is on the road to recovery?
Well, I think we're headed in the right direction. Seeing claims decline on a weekly basis is encouraging. We also had the May payrolls report, which showed 2.5 million jobs added over the course of May. But we are indeed in a very deep hole. We lost about 19.5 million jobs since March. We still see initial claims for unemployment when you add the regular claims and the additional pandemic claims, around 30 million, which is a very, very high numbers. And yes, we are seeing some declines on a weekly basis, but the claims remain somewhat worryingly sticky. And that is what Powell was alluding to when he said we need to get all these millions of workers back to work. We believe that perhaps 60% of the jobs lost because of the global coronavirus recession will be regained by the end of the year. But that remaining 40 is a lot of jobs that will still need to be regained over multiple years.
Greg, you tweeted this morning that the job outlook or the job outlook is dire, and I think that dovetails on what Chair Powell talked about yesterday regarding structural unemployment. Over the next couple of years, how concerned should equity investors be about structural unemployment?
Well, I think not right now. We should not be concerned right now. But as this recovery takes hold, we will see how rapid it is. I think there's a lot of euphoria in the fact that we saw some good jobs number in May. 2.5 million jobs was the strongest jobs growth ever. But that's only 10% of the jobs we lost in March and April. The same is going to be visible for a number of economic indicators, retail sales, industrial production. They're going to rebound in May and June, and the rebounds might be very strong. But what we have to remember is how deep the hole is from the global coronavirus recession. And as this recovery lingers on, we might see some efficiencies in terms of the labor market. We might see small businesses that file for bankruptcy and don't come back. And we know that small businesses are really the pumping heart of the economy in terms of employment and dynamism. As the recovery takes a longer period of time, we could see some more significant structural damage to the economy.
Greg, the Fed made very clear. The Fed made very clear that they're there to do whatever it takes to get us through this. They also talked about how Congress is doing its part. But how likely is it that we get another round of stimulus from Congress? And also, what else might the Fed do in the coming months to help boost the economy?
Well, I think Powell was very clear on a number of fronts. The interest rates are going to remain near zero for the foreseeable future, likely well into 2022, according to the economic projections. We're also going to see unlimited QE, at least at the same pace as currently, and we're going to see the emergency programs, the emergency facilities that the Fed put in place remain in place for the foreseeable future. That is the arsenal that the Fed is currently putting on display. Going further out, I think we might start to see some yield curve control to prevent long-term rates from rising too much, and we might see a combination of that with data-based or date-based forward guidance, i.e. saying until certain objectives aren't realized, we're not moving off of this very accommodative stance. Powell was, as always, a great diplomat in suggesting further assistance from Congress and noting that the Fed has the lending powers, not the spending powers, and that, in a sense, congressional aid needs to be put forward to support the economy on the path to recovery, including assistance for the unemployed individuals and aid to state and localities.
Greg, fears about a second wave of the coronavirus they're rippling through Wall Street this morning. You see the futures under severe pressure, and rightfully so. Texas has reported a spike in infections. So has Florida. In your estimation, what happens to GDP? How bad does it get in the third quarter and the fourth quarter if we do see that second wave?
Well, I think one of the interesting developments with this pandemic and with this recession is that things are moving very, very fast. We indeed saw the sharpest decline in economic activity in terms of speed on record. We also saw the NBER call this recession after just 3 months. And what may be the interesting paradox is that actually we're probably past the trough in terms of this recession, even by the time the NBR just called this recession. I think that as we look out, we have to be a little bit careful with how the health crisis evolves. We have to remember this is a health crisis that has led to this global recession. And I've been pointing out for the last couple of weeks that if you exclude New York and New Jersey, which have been doing very well in terms of the pandemic, you have a number of rising new cases across states. I think close to 20 states are seeing cases rise in the US. That's still part of the first wave. That could have a dire effect on the economy just at the time when we were starting to think about recovery. The key question is, how strong is the fear factor and how strong are renewed lockdown orders when they're put in place?
Yeah, lots of unknowns there. All right, Greg Daco, Chief U.S. Economist at Oxford Economics. Great to see you this morning. Thank you.
Always a pleasure.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.